And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is the 1st of October 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY, we have the weekly chart. As you can see, we have reached to the buy side liquidity that I've been calling for weeks in advance. We've tapped into it and closed above it last week. As a result, we have created this long premium wick. Now, what I'm expecting next is either price gonna be consolidating, or it can, if it runs above the consequent encroachment of this premium wick, it can treat it as support, and as a result, it can send the price higher to the wick consequent encroachment that is annotated here. So if you get your charts and you measure from this high to this low, you get the midpoint, or also known as the consequent encroachment. It will be this level. Otherwise, price might retrace to open here, trace lower to the fair value gap. If it traded below the fair value gap, I would monitor it closely and see if price wants to treat that fair value gap as resistance, and then reach to the consequent encroachment, which is this discount wick consequent encroachment, which is the midpoint. So that's pretty much it for the DXY. This is my outlook. Since price has reached to the main buy side liquidity, or my main drawn liquidity, I'll be sitting on my hands and I'll be just monitoring and tracking the markets closely to see and to anticipate any signatures in price action that will be allowing me to take some trades. Going to the daily chart, as you can see, the same thing is said for the weekly, is applied to the daily, but here on this is the blue shaded area is the weekly fair value gap. Notice how we also have a small fair value gap here, the small imbalance here, we filled that and we repelled away from it. We have the weekly consequent encroachment, so it's a BD array that's lifted from the higher time frame, the weekly, to the daily, so you don't get lost with that. So you also notice how we had the rejection block here, this close here, price traded higher and then went lower, so we formed a swing high. So I'll be as I've shared and as I've mentioned, I will be monitoring closely to see how we're going to be trading here. So that's pretty much it for the DXY. Going to the ES, now viewing the December's contract, since we're trading inside of this month's contract. This is the weekly chart. As you can see, last week we traded higher to where? To the low of the inversion fair value gap, or to the high of this candle. So you go to your charts and you measure what is the high on this candle. I'm not doing it here, so you go and you do it by yourself. Go to this candle here on your chart. What's the high of this candle? You would extend it in the future. You would see that this candle's high is the same as this candle's high, and then it traded lower, filled the weekly fair value gap, and then it built away from it and closed at the consequent encroachment of the weekly fair value gap that I was quoting for draw liquidity. And we in fact seen price reaching to that and closing it, like it has filled it completely, which is the draw liquidity, and we've seen that. So as we've closed at the consequent encroachment of the weekly fair value gap, the discount wick of this candle or this week is approximately at the low of the weekly fair value gap. So going to the next week, if we trade below the weekly fair value gap, which is also an approximate to the consequent encroachment of this discount wick, I'll be expecting and treating these levels, which is the influence of these two levels, which is what I'm expecting, honestly. And we respect these two levels as resistance. This may send us lower to the weak consequent encroachment, which is this candle's discount, which which is this discount wick consequent encroachment. Otherwise, we're gonna be repricing higher to fulfill some of this inefficiency which was created as a result of last week's trading. So we have a fair value gap from this candle's low to this candle's high, which is last week. We have a fair value gap. Also, we have a weekly inversion fair value gap that is inside of it. The thing that is calling me that price we're likely to reach lower is that we formed the high at the weekly inversion fair value gap. So we're seeing some strong price action signatures at the high or at premium. Going to the daily chart, as you can see here on Monday, we formed the high of the week and we wicked to the consequent encroachment of the daily refined fair value gap, which is this fair value gap here, from this candle's high to this candle's low. So we repriced some of the fair value gap here within these three candles. I've already explained this in the last weekly review. You're welcome to check it out. But we have repriced through this fair value gap, just from this candle's low, from this candle's high to this candle's low. We repriced to it all the way there. So this is a refined fair value gap. We also have a sell side liquidity, which is a swing low, three candles that form swing low. So we tapped to it on Monday, and then on Tuesday we closed below it, and now for the rest of the week we've been consolidating inside the Tuesday price action or Tuesday trading. So the same thing is said for the daily as I've mentioned on the weekly. I think that's pretty much it for the ES. Going to NQ here, reviewing the continuous contract, and this is the weekly chart. As you can see, last week we traded to the sell side liquidity, which is previous month low, and we also tapped inside the sell side liquidity, which is also inside the weekly fair value gap. So next week, also you can go and check out my Twitter account. I've shared a trade where I took a position from this approximately from this area, like at the 14,800 all the way down to the sell side liquidity. So I'm not just calling levels out just in hindsight. No, I'm actually taking trades to these draw liquidities. So I'm actually being involved in the marketplace. I'm not just calling the markets, but I'm trading the markets. I'm sharing my insights and I'm sharing my calls here on YouTube to document these moments where I've been calling price action in future. So I'm anticipating future moves in the marketplace. But the main part is executing the positions, executing the trades, and I'm doing that perfectly. And you're more than welcome to check my Twitter account to see how I've shared my MT5 account. I've shared how I've drove this, and I've taken short positions in the NQ, and I've distributed them at the sell side liquidity. And later on, we've seen a retracement. So I was able to take out my positions and to book my profits at the low of the weekly candle. Anyway, now what I'm expecting later on, we have the premium, we have the discount wick, consequent encroachment, which is this level. Go to your chart and you annotate it. Don't take my word for it. Don't steal my charts. Don't just screenshot my charts and keep them. No, you have to go to your charts and you have to annotate them. So you're building experience. Anyway, so we have the weak consequent encroachment here. If we trade and treat it as resistance, I'm expecting price to reach to this low, which is previous week low. Is gonna be previous week low. It's gonna be previous week low once we start trading next week on Sunday actually. Anyway, so I'll be expecting if we trade and treat the weak consequent encroachment as resistance, I'll be expecting price to reach to the low and to the consequent encroachment of the weekly fair value gap, which is from this candle's high to this candle's low. The consequent encroachment is the midpoint. So I'm expecting, if price, as I've mentioned the scenario, I'll be expecting price to reach to the consequent encroachment. Otherwise, price will be repricing higher to fulfill some of the unfilled fair value gap, which was created as a result of the last week's trading. So both scenarios are in play. Both scenarios can be occurring, because why? We're gonna be sitting on our hands and we're gonna be requiring more intel from price action from price, because we've already reached to our drawn liquidity and we've took our profits. So there is no reason for you to go into the marketplace and trying to anticipate the next move. In this situation, and in this situation, it's gonna be if so or if so. So if we get this condition, we're gonna be driving towards this draw liquidity. If we get this condition, we're gonna be reaching to this towards this draw liquidity. So it's not gonna be 100% guaranteed move. No, I'm expecting and I'm waiting for price to show me the signatures that it wants to show me in order for me to be anticipating the future moves. As of now, I hold no bias since price is not giving me enough information to be working with. That's pretty much it for the weekly chart. Going to the daily chart, as you can see here, we tapped through the previous month low, and later next day we tapped into the sell side liquidity, which is this sell side liquidity, and to the weekly fair value gap, and then we retraced higher, worked inside this fair value gap, and as a result we formed this weekly fair value gap, which is this shaded area. So the same thing is mentioned here. I'm holding no bias. I'm wanting more information from price so I can be working with the market later on. That's pretty much it for the NQ. Going to Dow, here we have the weekly chart. As you can see, we've reached to our sell side liquidity. Here we've go to it now, and we also reached to the consequent encroachment of this discount wick. Go to your charts and you measure from the candles opening here, on this candle opening to the low, you get the midpoint, or also known as the consequent encroachment, and you can see that how we reached to it last week. So now we have a fair value gap which was created as a result of last week's trading. Price can retrace now to the fair value gap and to the bearish order block, which is this up close candle. Price can retrace to them, accumulate more orders, or it can just run towards this sell side liquidity. Either or. If it trades and closes below the consequent encroachment of this discount wick, this is going to be, if it's just trading and treating the consequent encroachment of this discount wick as resistance, this is just giving me calls that price is going to be reaching towards this sell side liquidity. Nothing is guaranteed, and I'm just sharing my insights and what I'm expecting from the marketplace. Going to the daily chart, as you can see here, we've been treating the daily fair value gap, which is this fair value gap here, which is also a refined fair value gap from this candle's high to this candle's low. We repriced inside this area here from this candle's high, from this candle's low to this candle's low. There's a small area and we filled it. So this will be a refined daily fair value gap, or a daily refined fair value gap. We traded to the low. You can see how the bodies are respecting the low of it, and then on Friday we've seen price surpassing all the way higher to the sell side liquidity low, and then it traded and closed below the daily fair value gap. So now I'm anticipating and I'm monitoring price. If it wants to treat the daily fair value gap low, which is this candle's high, you can go to your charts and you can measure from this candle's high. I want to see if price wants to treat that as resistance. If it did so, I'll be expecting a run towards this sell side liquidity and towards this sell side liquidity. Otherwise, if it price trades and closes and treated this consequent encroachment, which is inapproximate to the fair value gap high, or the daily fair value gap, refined fair value gap high, we're expecting a retracement towards the fair value gap and to the bearish order block that I've shared on the weekly chart. These two levels here, the bearish order block and the fair value gap. If it treated the consequent encroachment, which is the premium consequent encroachment, as support, it is more likely to be retracing towards the fair value gap and to the bearish order block to accumulate more orders, to perhaps if it wants to reach to lower prices to accumulate the or to offset the sell side liquidity, which are the sell stops that are resting below this low. That's pretty much it for Dow. Going to the Euro USD, also known as the fiber. Here we have the weekly chart. As you can see, last week we've reached to the wick consequent encroachment, we've reached to the sell side liquidity, and we were very close from reaching to the sell side liquidity, which is this candle's low, the long discount wick low. Anyway, so we didn't tapped into it yet, but we formed a long discount wick here. We measured the consequent encroachment of it. Now also we have created a volume imbalance. So next week, if price traded and treated the traded lower and treated the consequent encroachment of this discount wick as resistance, it can send price towards this sell side liquidity. However, there is a caveat here that we want to see price trading and treating it without taking the low or without reaching to the sell side liquidity. So I'm expecting price to trade below it without taking the sell side liquidity and then returning to it and like retracing to it, treating it as resistance and then running lower towards the sell side liquidity. But if it just ran lower, one straight move towards downside and to the sell side liquidity, the consequent encroachment will not be in any effect to me. So I will not be taking any importance of this consequent encroachment. The other scenarios would be this: we have a volume balance, price can trade and treat the high of the volume balance as support, which can as a result tells us that we have a retracement further higher, perhaps to the consequent encroachment of this premium wick or to the inversion fair value gap. Going to the daily chart, the same thing is mentioned here. We have a small fair value gap here, we repriced to it, made it efficient, and we also traded to the bearish order block here. So I'm gonna be monitoring closely. If we trade below the consequent encroachment and we close below it, this may send us lower towards this low and to the sell side liquidity that is showed on the, I can show it here like this sell side liquidity here, which is also viewed on the weekly chart. Otherwise, if we trade and close above the volume imbalance, which is also above the mean threshold of the bearish order block, this can send us higher to to show us a retracement that can accumulate more positions if price wants to take out this sell side liquidity. Or we can see the quarterly shift where price is just transitioning from the sell side delivery to the buy side delivery. But I'm not trying to pick any tops or bottoms. We're still monitoring and tracking the markets closely to see what it's trying to offer and what it's trying to provide us in terms of info and in terms of information. Going to the pound USD, also known as the cable. Here we have the weekly chart. As you can see, we've reached to the drawn liquidity that I've been calling for last weekly review. This fair value gap. So this run here is now efficient by repricing lower to all and traded inside all of the inefficiencies and the sell side liquidities that were existing here. We have we had this fair value gap and we repriced to it last week, and we formed this long discount wick. Now if price trades and if it trades below and treat the consequent encroachment of this discount wick as resistance, this can send price lower to take this sell side liquidity, which is previous week low, and to reach to the wick consequent encroachment, which is this level right there. Go to your charts and you annotate your charts based on the measurements from this opening price to the low. The midpoint, or also known as the consequent encroachment, is this level right there. So that's pretty much it for the weekly chart or weekly time frame. Going to the daily chart, as you can see how we traded lower, repriced, and traded inside the weekly fair value gap, and we've seen a retracement with the long premium wick. So the consequent encroachment of this premium wick is in play for me. If we trade above it and close, this might send me a signal that we're going to be retracing inside this fair value gap. Otherwise, if we trade and treat the weekly consequent encroachment as resistance, this will send us lower to take this low, which is the sell side liquidity, which is previous week low, and to reach to the week consequent encroachment. So that's pretty much it for the weekly review. I'll just be addressing some other points that next week we have NFP on Friday. So it's advised for you to finish your trading within from Monday to Wednesday's New York Open. Later than that, the precision is going to be off. So price is going to be experiencing the high resistance liquidity runs, or also known as the low probability. So it's going to be either consolidating, trying to build positions and trying to build orders above and below the marketplace. So NFP can take one of the two sides out, if not the both. So that's pretty much it. I hope you learned something from this. And until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wabarakatuh.